A lot of it is, are you looking for income? Are you looking for growth? I mean, obviously, farmland's a great asset class because to me it's kind of a sneaky asset class because people don't think of it as a great performer. They think of it's just a store of wealth and you've owned it for a long time, where in fact it actually beats most asset class over the long run.
Well, today on the Land and Everything Else podcast, I'm being joined by Jonathan Shively, who is the Director of Capital Partnerships at People's Company, he's based in Arkansas, but we're live here at the Land Investment Expo. Jonathan, thanks so much for joining us today.
Glad to be here.
Yeah.
Thanks for having me.
Yeah, we're excited. So we've talked to several folks at People's already, and I want to get to know more about what you do with them, but let's backtrack a little bit. Tell me more about you, your career, how you got your start in land in particular.
Okay, sure. So I kind of did the inverse of how you normally do it. Normally you bounce around a couple places and then you find a home. I worked for the same group out of college for 18 years, private investment bank out of Little Rock, Arkansas, but that has a national and now international footprint. My former head of the family just got appointed to be the ambassador to England, which is like the biggest. So I ended up doing that for 18 years. I was a broker, so I'm still licensed on the brokerage side. But instead of being an individual broker, a retail broker, I was an institutional equity broker on the capital market side. So I called on the mutual funds, hedge funds with our small cap equity product. So.
Interesting. And when you talk about in your institutional capital, are we talking like your $1 billion partnerships, $1 million, or just to quantify for our viewers?
$300 billion. I covered Janus in Denver, covered Invesco down in Houston, covered all the big funds out of Dallas. The last couple of years I was there, I was rolling out, basically spearheading coverage of developing coverage for us in London. So I spent 8 weeks over there in 2015, and then resigned after that because missed my daughter. Do a lot of things when she was new and born. But I covered like BlackRock, Blackstone, Threadneedle, all the major funds over in London as well.
Interesting. And so you said you were a broker. How did you marry that with land, I guess, and how you got started into the more land investment side?
Sure. I was am a city boy and grew up in Little Rock, Arkansas. Some people would say that's not a city, but it is a city.
It's a city, yeah.
And so grew up there. Did not know anything about agriculture. Did not know anything about farming. I was a duck hunter and started looking at land, and we were leasing spots during the season, and I started getting the itch to buy something. And so after the market melted down in 2008, I was looking a little bit more and ended up buying a farm that was 30 minutes outside of Little Rock. Had no idea what I was doing, had no idea wasn't asking the right questions, wasn't saying how productive is the farm, how deep are the wells, what's your, I broke it up like you'd break up if you're analyzing a company. So I did it totally wrong. It worked out okay. It's probably my best asset now, and so that interested me. Then I started covering London, and I'm covering all these groups, and we had covered multiple industries, covered about 400 stocks, but with that we covered a lot of food and ag, covered everything from like ADM, Green Plains on the more commodity side to the chicken companies, Tyson Foods, all the Pilgrim's Pride, the whole groups of chicken companies, and then we ended up having a lot of other agricultural names, and I really gravitated towards that. I did not, I didn't like small biotechs and technology but I really loved the transports, and I loved the things I could feel and touch, and so ended up going over to London, and I would take companies. I had ADM over there. I had Dean Foods, the milk company over there, and I came over there kind of with the ignorance of being from the United States and thinking, I'm in Arkansas, and it's a big farm area, and
You're the heartland.
It puts you in. It put me in my place on how small we actually are and how arrogant we really are on it. so I start meeting with these different investors, and they're portfolio managers, they're analysts. These are not ag investors necessarily in the day job that I'm talking with them.
Yeah.
But they start talking about how they've got thousands of acres of farmland down in hundreds of thousands of acres down in Australia, and their investments in Africa. And at that point, they were all going into Ukraine and in Eastern Europe, and I remember just thinking that how small what I think of, like, I'm in the Delta, and Delta's huge and
huge rice.
It's really small compared to, and I think a lot of the investable dollars are still here, probably disproportionately.
Yeah.
But you go out to Australia or different areas, and they put our farms to shame on the scale. Yeah.
Well, yeah. Even South America, I've got a student of mine who he was showing me his family's cotton operation, and they've got, probably my family farm. We've got a shed that's 10,000 square feet, and they've got 8 to 10 of those for the ginning process, and then like all of these homes. Basically, it's like an entire town of workers, and so it's hard for us to quantify in our heads.
It's amazing. The only one I couldn't figure out was there was a guy that was a tech PM, big tech fund. I'm not gonna say which firm, but he wanted to meet with Dean Foods, and so I couldn't figure out why. I was like, this guy's tech. These other guys are kind of generalists, and they're covering ag, and it made sense. Well, he had bought a dairy farm in northern England and was getting killed on the milk prices and different things and all the changes in the industry, and so that's the reason he took it. It was a personal deal, not that he was going to invest in the stock. So
dairy's hard.
It was a lot of fun, though.
Yeah, no, it would be. Kind of on that scale, we're at the Land Investment Expo, and there's been lots of conversations about geopolitical risk that's happening. The war in Ukraine, China, all of those. When it comes to, if I'm looking at maybe farms or farmland or agriculture outside of the United States from an investment perspective, maybe what region or what area of the world would you direct them towards outside of the United States at this point in time?
I'm not qualified to answer
that.
Yeah,
okay. Like, that's curious. That's okay.
I've got enough in the U.S. to handle that.
Hey, that's fine.
But I could get them. We just did a partnership on being able to facilitate brokerage across borders that I helped work on the
Great.
International Ag Alliance, and so we do have Danny Thomas here from Australia, and Charles Whitaker from Brown & Co., which is out of the UK. So and so we just. I direct you to them. I think before this and the fact they are here, I would have made something up earlier.
No, it's okay.
Earlier I'd have made something up but now I know they're out in the crowd and they can actually call me out on it. So
yeah, no, I was just curious. Especially there's been some conversations here about, like, obviously with the incoming administration about investing in America and trying to bolster our supply chains, and really trying to finite our focus in the United States from an investment perspective. And so I was just curious, but I appreciate you deflecting that. And if I can track them down, I definitely will.
Definitely.
So that kind of moves me into talking about your current role with People's Company. How'd you get started?
Yeah, so I am the director of capital partnerships. So I am in charge of trying to bring in new capital partners to People's Company capital markets team. And so with that, we are trying to bring the farmers that need capital and farm owners that need capital, marry them with the capital capital investors.
Great.
And so I think I got stuck into my international talk earlier, but yeah, I ended up in 2015 leaving Stevens, and I had bought a farm. I now was running a construction and development company. Everything I had was intangible. On the analyzing stocks, I wanted to go out and do something that was tangible, and so I went and picked the hardest thing I could do and actually run a construction company. From there, I ended up going with Carter Malloy, who we used to work together at Stevens, the group that I worked for, and ended up going to work with Acre Trader. And left. I was ready to move on, ready to get back more in the financial world. I'd built up the construction company, and from there, I ended up meeting Carter asked me to come help build out some things, so I went there, and I got to know Steve Brewer, and like other things at conferences and some late nights and good cocktails with Steve, I ended up wanting to join People's Company.
Yeah.
And to me, it was what I was doing before, and that was a very long-winded way of coming all the way around. My ADD, I can tell multiple stories at once. My wife will be like,
That's okay. I'm the same way.
will you finish the other story you're talking about? But no, it's to me, it reminded me of where I was in the brokerage industry that I joined. When I would talk to the guys that were significantly older than me, and they would talk about what the stock business was like back in the 70s and 80s. It seems like the brokerage, that the agricultural industry for investing is similar to that right now. It's very inefficiently capitalized. There's no, it's hard to price. It's hard to, it's not, you can't just go out and trade it back and forth.
It's not liquid.
And so with what we're trying to do is on the capital market side is we are trying to give people efficient ways to invest in farmland.
Okay.
And that can be family offices or high net worth. That would be on our separate account business, where we go out and we can build a diversified farmland portfolio for them, and then which gives them unique. There's commingled funds out there. They're great. We do a lot of business with the funds. There's REITs out there that do a great job, but this is a unique where they keep control. They can build something that suits them, not something that you're a fund. You got to pretty much build it for hundreds of people, if not thousands of investors. This is unique to them. They can control when they can buy it, when they dispose of it, how they want to do it, what they want to do. As you heard on one of the breakouts earlier, it's you can customize it to your way, and that may not be, as we saw, it's not the way some of the other people would do it, and that's the unique part. We also work with wealth advisors to where we can give access to them, and that would be through private offerings where you can set up special purpose vehicles and things like that.
That's kind of where my next kind of question was on the structure. When it comes to, let's say I've got a wealth advisor that's got a high net worth client that is wanting to add farmland into their portfolio, what kind of questions, I guess, are you asking them up front to try to match them with the right opportunity? Sure.
A lot of it is, are you looking for income? Are you looking for growth? I mean, obviously, farmland's a great asset class because to me it's kind of a sneaky asset class because people don't think of it as a great performer. They think of it's just a store of wealth and you've owned it for a long time, where in fact it actually beats most asset class over the long run with a lot less without having all the issues of some other. It's got some great characteristics. So with that, you're wanting to find out what they're trying to do, what they're trying to solve for, and that's the great thing is we can solve for it because we're customizing it to them. So what are your clients looking for? Are they looking for income? Are they looking for just appreciation? We get people that say, I don't want any income at all. I'm making income. I want to let's put it back into the farm. Let's do some land leveling. Let's do some projects to keep it.
Drainage tile.
What areas? And that's more a lot of times preference. We have areas that we prefer that we think are great areas depending on the time. But you get people that can feel strongly about that, as you saw earlier as well.
Yeah, we did see.
Some people don't like certain areas. Some people like other areas. And so really just trying to figure out what is their return parameters. What's their risk? They've got to, if it's, we want to own it 3 or 4 years, then it's not the right asset for them.
No, definitely not. And when it comes to, let's go on smaller scale.
Sure.
What is maybe the smallest size deal that we're talking about high net worth, but maybe more like, what is the smallest size of a deal that you've done or worked with somebody on? Like,
Sure.
they come to you and they say, I've got $200,000 or I've got $150,000. Like,
Sure.
what can you do for me?
Yeah, for $200,000, it's going to be, I would probably say go buy a REIT or buy something.
yeah.
Now with the Delaware statutory trust business that we did, that actually, yes, you have. That's the beauty of that. You can get into to that, but I would not go into direct farmland ownership with $200,000. I think you're starting out with you're starting out on the wrong end of it right there. But we do offer the Delaware statutory trust where we can give you a 1031 1031 exchange into DST structure. And that is fractional. We also have we do offerings from time to time where they're fractional as well, where you can go in and you can buy, depending on the quantity, you can buy a fractional, and that's a great way to get exposure and to buy multiple. I bought a farm in 2010, like I said, that I did not know what I was doing. All my eggs are in one basket in Lone Oak County, Arkansas, but I go out there. I love being out there. I take my kids out there. But you see people that are actually building fractional share platform that invest with us, and they are actually building probably a more diversified portfolio. They own a part of a cotton farm in Arkansas, and or a rice farm in Arkansas, and a cotton farm in Mississippi, and corn farm in the Midwest, and they own dryland wheat in the Pacific Northwest. So that's a great way to be able to get a diversified portfolio.
It is, and that is the beauty of, you can still be 100% concentrated in agriculture, but it is such a diverse asset class in and of itself that you can get exposure that's going to offset risks in one area of the country or commodity type or something like that by investing in another. So
100%.
Yeah, that's really interesting that you brought that up. So circling back to something that you said earlier about hunting properties.
Sure.
Because I find that really interesting, as it's not something I ever thought of as an investment vehicle.
Sure.
Do you have people that come to you and say, we want to buy recreational land for this purpose as an investment?
Yeah, 100%.
Yeah.
But, up here it's more farmland.
Yeah.
Farmland specific, but down in Arkansas, the rec land will go for almost as much as the farm. And so I was lucky. My thing, I have tillable plus rec area, and so my goal was to have my income cover my note, and luckily that has most years, and so, but there's people out there that are buying trees and fallow land, and so it's a big. It seems to be exploding, and then also just with COVID, people wanting to get out, not even wanting to hunt, just wanting to get out and have land and plant something, plant a large garden, and have just an area they can go out and get on their own.
Yeah,
so.
It's interesting. I underwrote a deal it was in Arkansas, and it had row crop and then also hunting property, and it's just really interesting. Nothing I had been exposed towards, and I didn't really what the dollar size was, how much value there is in that, which I thought was really interesting. When it comes to the management side, so let's say you've got a high net worth individual or advisory firm that's like, we want to invest in land, we don't want to manage it.
Sure.
What do you do at that point in time then?
So we would end up working with them. Sometimes it's customers that already have some land, and so we bring in, and we have to reposition their portfolio. We go in and review, and we look at all the assets and say, these are great. Yeah. We wouldn't touch these. We may have some things we would do to complement them, but then these aren't great, and we would suggest doing something differently. So that would be repositioning, and then we would start investing. With someone that just came in and didn't have a portfolio, it'd be the same thing. You just start with the investing side of it, and so really it's learning what they're trying to accomplish. Again, back to the learning what they're trying to accomplish, what they're are they want income? Are they on growth? What's their risk? What's their and it's across the board. It's people that want. I want income, and you get people want monthly income. That's probably not going to be.
That's not the right one.
And so, but with a separate account business, we're looking at $5 million to $25 million plus.
Okay.
On the private offering side, it can go smaller. It can be in the 2 to 5 million range or north of that. It really depends on what they're doing and whether they'll do 2 millions on the small end.
Yeah.
But if they want to do an offering a year and actually start creating their own little diversification on their offerings themselves, then that's a good way to do it. Kind of leg into it.
And a lot of your clients using leverage as well as part of this investment, or is it primarily equity capital?
Right now, it's pretty much equity capital.
That's what I figured.
It's tough right now, as you know, it's tough on that to actually put leverage on. You can put a smaller amount on, but I think on that side, when you're talking about wealth advisors, nobody wants a capital call. If you're an individual, then maybe it's a little different. Nobody wants a capital call ever, actually. So, but if you're a family office and that's your idea, then you could come in with that strategy. Wealth advisor, they're not going to, so they're not going to put leverage.
Yeah.
But you get other people that say, I want to lever this up, and I'm looking for 10, 15 years out, and I want to grow the portfolio as much as I can, and I'm willing to feed it, and so really it's all across the board.
Yeah, and once depending on the structure, trying to find the right debt partner on that side of things can be difficult as well.
Yeah, 100%. Yeah, but for our core customers, we're looking at going out and buying quality land.
Yeah.
Getting a good cash yield that's going to cover things, using crop insurance to get our minimum revenue guarantee, and then grow the actual appreciation side. I mean, it's a great asset class because it's so capital gains efficient.
Yeah.
And so when I go to conferences and I meet with wealth advisors or sponsors of other asset classes, they're asking me, what's your cash yield? What's your how often do you pay your dividends? And I immediately know we need to back up, and this isn't warehouse, this isn't commercial real estate, totally different asset class. And I start asking them, what are you paying on ordinary income, and what's your appreciation rate, and how are you, what's your tenant vacancy? Because farmland has zero. Basically, good farmland has zero tenant vacancy, and so you can quickly kind of turn it around on them. So
it becomes a conversation about liquidity in and of itself. Of what are you looking for if you're needing something that's liquid? This is not.
It's not the place.
Not the place for it.
But it's interesting. I mean, you look at all the major, Bill Gates, and they're talking about Malone in there, and they start talking about different groups, and I mean, you can flip through the land report 100. And most of those people made money. I mean, some of them started with timberland or farmland or whatever, but most of them made money doing something else, and then ended up buying farmland or timberland or just because of the great characteristics of it.
Yeah.
The portfolio diversification, the capital preservation, the how it's extremely capital gains efficient, and so there's just a lot of things to like about it.
No, they're absolutely
inflation hedge right now.
Yeah,
I'm getting a lot of folks that are calling about really big investors, smart money that they're staring out a couple of years, and they want to move into hard assets. And so,
that was kind of my next question. I did a report with People's kind of talking about post-2008. You saw a lot of the interest in farmland with these institutional investors because of the inflation protection and with the Federal Reserve's quantitative easing strategy.
Sure.
What do you think we're in for the next year when it comes to land trends? I've been optimistic. I'm always bullish long term on farmland, but the last year or so has kind of thrown me for a loop, and I'm not really sure what to expect.
Sure.
So I'm curious to hear what you think.
Yeah. I think for the next year or so, I think it's going to be flattish. In certain areas, it'll be different. Certain areas maybe up a little bit. But I think, it's not the stock market. It's not mark to market. I think if it was a mark to market world, like I spent 18 years on a trading floor, it would be farmland would be down.
Yeah.
But it's 2%, turns over 2%.
Yeah.
It has the beauty of if you don't want to sell, if you don't like the price, you don't have to sell. Now, there's obviously situations where that's not the case. A lot of the D's, but mostly that's the case. If you don't want to sell, you don't have to. And so I think that farmland's going to be a little bit challenging. I do think that we've seen more opportunity recently where last year everybody was wanting the old price. They're looking at what somebody down the road sold their farm for, and so seemed like it was kind of the market was stuck a little bit.
Yeah.
Sellers weren't wanting to sell at that price. They were wanting old prices. Mm-hmm. Buyers were like, oh, I'm getting a deal. A deal's coming up. And so we're seeing a lot of things. I think people are now going, hey, if I want to buy it, I need to buy it.
Yeah.
I've been waiting to buy it.
Yeah.
Sellers are saying, hey, if I'm going to sell in the near term, this is probably a good time. So we're seeing a lot of opportunity. What I think personally, I think that it's going to be flat to down right now, mm-hmm. and I think you can get some good opportunities out there. I think longer term, I think that inflation's going to kick back up, and I'm not a prognosticator, but I think that inflation is going to kick back up. Yeah. You can't print the amount of money that we've printed.
That's true.
And I've seen a lot of, been on a trading floor, seen a lot of crisis where things were locked limit down, and we cheered when they shut the market down.
Yeah.
I think that it's going to be a long term, we're going to have to work out some things.
Oh,
we're going to have to balance our federal checkbook, and so I think land's a great place to be.
I agree. We cannot have spent the amount of money we have spent in the last 5 years post-COVID
100%.
and it not to come back.
Can't do it. You can't do it personally. We can't.
No.
I can't go out and buy like they did. And
no.
But I do think it's a good point to answer your question. When you look at it, if you look at the farmland market, and you know this, if you look at a chart, it will be flat for years.
Yeah,
and then it makes big moves.
Yep.
And when I bought mine, like I said, I didn't know what I was doing. Didn't even think about whether it was gaining or wasn't gaining, or I knew it was a good asset, and I bought it for the reason to be able to have something I could pass down to my kids and have an inflation hedge and diversify my portfolio from all the things that I was doing with my 401k and trading account and my day job. It was all tied to the market. And then all of a sudden I woke up and I was like, wow, it's going up. It's going up. And I had people trying to buy it last year, and it was, it was significantly more. I did not sell it, but so I don't think it really matters. I think the people that we're wanting to deal with and they understand that this is a long term, and they want the diversification. They want all the different things that the great asset, the great characteristics of it. And so buy it and sock away. The old cheesy, they aren't making any more of it. So
we do love to say that line in agriculture.
Yeah, no, there's a couple of them that get regenerated over and over again.
Oh, yeah.
So
no, that's all really good points. And when we looked, you and I obviously have a stake in land and farmland, but I can't say that now isn't a better. It's such a great time to buy, honestly, especially if you're thinking about trying to buy, buying low, selling high.
Sure.
This could be a great opportunity to partner with someone like People's Company and match you with a deal like that.
Sure, 100%. What we're seeing is a lot of, maybe the land, the B land, B minus land, C land. You're seeing some weakness in that.
Yeah.
The quality land.
Still selling.
It's still going at, and it's just, I think that's a good lesson. Like it's you buy quality and buy it when you can and just hold it and forget about it.
Yeah.
So
exactly. Well, I love that note. We'll go ahead and end on that note. Jonathan, thanks.
Yeah,
thanks
for having me.
This was awesome. I really appreciate your time
enjoyed
today.
Yeah, thanks for having me.
Awesome.
Good to see you.
You too. Thank you.